Boeing, once an aviation giant, finds itself plummeting in the stock market abyss, down 7% in the wake of the Alaskan Airlines Flight 1282 incident. A flight, just weeks old, became a harrowing spectacle as a depressurization issue reared its head, courtesy of a popped-off door frame. This catastrophe has ignited concerns, not just about the immediate safety of air travel but about the systemic failures in safety checks and manufacturing standards that Boeing seemingly harbors. The optional emergency door plug took an unscheduled mid-flight exit, compounding the already alarming incident. The Federal Aviation Administration, FAA, in a move that underscores the gravity of the situation, has slapped a global grounding order on all Boeing 737 MAX 9 planes, impacting over 170 aircraft. This, of course, is not Boeing's first tango with safety issues. Prior to this incident, the company had issued urgent advisories for inspections of loose bolts on its 737 MAX airplanes. The ominous signs were there, but it appears the alarm bells weren't ringing loud enough. As we dig deeper into the supply chain, the largest supplier, Spirit AeroSystems, isn't without its share of troubles. Issues with improperly drilled holes have surfaced, raising questions about the integrity of the components that make up Boeing's fleet. When the very building blocks of safety are compromised, the fallout is bound to be catastrophic. This, unfortunately, is not a standalone event in Boeing's turbulent recent history. The haunting echoes of two separate crashes involving MAX 8 jets in 2018 to 2019 still resonate. Those tragic events were attributed to flight control software problems, a testament to a pattern of negligence in ensuring the reliability of Boeing's technological innovations. The financial ramifications of these crises are painted starkly across the canvas of Boeing's stock performance. A downturn of nearly 30% in the last 5 years is no mere blip on the radar. It's a glaring red flag, signaling that all is not well within the once sturdy walls of this aerospace titan. Digging beneath the surface, the underlying fundamentals, including revenue and free cash flow, offer no solace. There's no silver lining to be found in these numbers. Instead, they reflect a company in distress, desperately grasping for stability. Yet, despite the woes and poor execution, Boeing maintains a staggering $140 billion market capitalization. The question that begs to be answered is whether this valuation is grounded in reality or if it's a mirage masking the inherent risks and uncertainties that now define Boeing's trajectory. Investors are left to grapple with a company that, despite its fall from grace, clings onto a valuation that seems divorced from the turbulent realities it faces. Boeing's commercial airplane and defense segments, once bastions of strength, now stand as pillars of losses. The cracks in the foundation are widening, and there's no sign of imminent repair. The very essence of Boeing's business, building and delivering safe, reliable aircraft, is under scrutiny, and the consequences are reverberating through its financial statements. Projections for the future don't paint a rosier picture. Boeing expects $3 to $5 billion in free cash flow this year, a modest figure considering the scale of the company. However, the valuation remains stubbornly high, hovering at 20 to 30 times the anticipated cash flow. Investors must grapple with the incongruity of a company facing operational challenges yet commanding a premium valuation that seems out of touch with reality. The financial health of Boeing is a mixed bag. On one hand, there's a cushion of $13 billion in cash and securities, providing a semblance of stability. On the other hand, this financial cushion is dwarfed by the looming specter of a staggering $50 billion in debt. It's a precarious balance that could tip either way, depending on how Boeing navigates the turbulent skies ahead. In the grand scheme of things, Boeing is no longer viewed as a compelling investment. The risks, poor execution, and inflated valuation create a toxic cocktail that repels investors rather than attracting them. The narrative of a once dominant player in the aerospace industry is now overshadowed by a litany of concerns that extend beyond the immediate fallout of a single flight incident. The safety of air travel, an industry built on trust and reliability, is at stake. Boeing, once synonymous with excellence in aviation, now finds itself navigating treacherous waters. The repercussions of its recent failures extend far beyond the financial realm. They shake the very foundations of an industry that hinges on the promise of safe and secure travel. The fallout from the Alaskan Airlines incident is merely the latest chapter in Boeing's unfolding saga of missteps and oversights. It serves as a stark reminder that, in the unforgiving realm of aviation, there is no room for complacency. The question that looms large is whether Boeing can rise from the ashes of its own shortcomings and regain the trust it has lost. Investors, once loyal patrons of Boeing's legacy, are left with a bitter taste of disillusionment. The allure of a once mighty company has faded, replaced by a skepticism born out of repeated disappointments. The road to redemption for Boeing is fraught with challenges, and the path forward demands a radical re-evaluation of its priorities, processes, and commitment to the highest standards of safety. As Boeing grapples with the fallout from the Alaskan Airlines incident and the subsequent global grounding order, the shadows of past mistakes cast a long pall over its future. The company must confront its demons, address the systemic issues that have led to this point, and chart a course that restores faith in its ability to deliver not just aircraft but a promise of safety that the world can trust. The aviation industry watches with bated breath as Boeing navigates through turbulence of its own making, acutely aware that the stakes are higher than ever before. Please go ahead liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.